Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. Rising prices ran into a roadblock in early June here at the March 2023 high at 540 3/4 and dropped off until 5 weeks ago when we had at the time a small gap filling recovery. This time halted by another roadblock, or should I say, a couple of smaller roadblocks. The first and the more significant was the neckline extension, currently at 528 3/4 of the April to August 2024 head and shoulders top. The neckline that throughout mid-late May to early June the market tried to make into a base action. That one is highlighted in bright red. And it's something we're very familiar with today. The second, to a lesser degree, obstruction was a July 23 high at 526.5, a congestion I also pointed out 7 weeks ago, and one we're also familiar with today for a similar reason. Anyway, the action 3 weeks ago had been quite interesting, with a third gapping move higher, but a gap that had no intention of becoming an exhaustion gap, as prices pushed higher still through some stratified congestions all the way through the 61.8% absolute Fibonacci line at 553 1/4 and developed a new pattern, the dark blue mid-April to late June bullish shift pitchfork. Last week prices moved up to the dark blue upper tie, currently at 560 3/4. Pushing through this and trying to utilize this breached dark blue upper tie as a base for a move up to tackle the next resistances, the February 23 high at 565 and the congestion at 569 1/4 to 570, containing the September 2022 low and the August 2021 high at 573 1/4 above that. I should point out now that at the start of July I said, and I quote, "I suspect this newly drawn dark blue bullish shift pitchfork may become a significant part of this commodity's future, so watch and see," end of quote. Now last week, to try and cope with this move higher, I drew a mid-July to end July based short, bright green, extremely acute bull channel. I said this at the time, and I quote, "I'm not in love with such an acute bull channel, even though this looks like the best of all the ones I've seen in oil seeds and veg oils. It is still very, very steep, and I would retire it in a heartbeat if it was compromised. That all being said, it does work for now in showing the way higher in this market," end of quote. Well, it stopped working last Friday when the market made a combined bearish opening long black Mariposa and bearish engulfing pattern that shot down right out of the bright green bull channel. Thus, this bull channel will be downgraded or retired completely after this commentary. What is interesting to note now is how prices are seemingly trying to stabilize at the combination of the green short medium moving average, currently at 529 3/4, and more importantly the bright red neckline extension I spoke about earlier, which is currently at 528 3/4. Now, it doesn't mean that we might not try lower, and to be honest, after all, looking at today's action is looking ominously like a possible daily key reversal down, and prices could do a gap filling drop down to the dark blue lower tie, currently at 523 or even the mauve medium moving average, currently at 517 3/4, and the nearby congestion from September 2012 between 513 3/4 to 519.5. But what it does mean is the bright red neckline extension is a key obstacle in either moves higher or lower, and that is valuable information. Winnipeg Canola. Last week, just one pattern still showed, and even now still shows, the overall way forward here. This longer term pattern, one I spoke about 22 weeks ago when I said, and I quote, "I have also drawn in the meantime a March to December 2025 bullish Andrews pitchfork," end of quote. This pitchfork highlighted in bright pink on my daily chart has so far had not had any tines, even now, not had any tines tested by the lower time right back at the start, and that held up pretty well back then. And an almost test, a pretty significant almost test, late last week of the bright pink overhead middle time, which is currently 8:53.90, when the market rose and approached, then shied away lower, falling from a bearish harami and outside day last Friday. As I said here for weeks and weeks, I think this pattern is very important for now and in the future. So please, please, just keep it in mind and keep a watch on it. Now, the fall lower has so far, today at least, been halted by the rising green short medium moving average, which is currently 771.30, as well as an earlier all-time high from March 2008 at 770 even. However, should the fall continue, look out for the rising mauve medium moving average below, currently at 755.90. But more importantly, look out for the 38.2% absolute Fibonacci line at 750.10. All these actions have prompted me to draw a possible new pattern to describe what is happening. And that's an unusual one, a late April to date, very large, broadening wedge pattern, highlighted in dark blue on my daily chart, currently 723.20 to 854.20. This is a very large pattern, and it utilizes the dark blue extension to the late April to late June head and shoulders top, as well as the lower trend line, as the lower trend line. I think this might be the pattern to watch going forward. Now, there were other shorter term patterns that had affected this market, notably a small bright green, very acute late June to late July bull channel, currently 832.50 to 865.50. I drew this last week to try and quantify the steep move higher seen since late June. And this bull channel did this until it was broken early this week. I foreshadowed this move in last week's commentary when I said, and I quote, "However, it is very steep, even though it is an appropriate number of touches per side. And despite this, I may well retire it next time." End of quote. Well, I'll either downgrade it or retire it after today's commentary. Bursa Malaysia crude palm oil. So, as I've done here for most of last year, now into 2026, I'd recognize the wide congestion area that was overhead, but which became a support, then a big congestion, and now support once more, between 44.08 to 45.59. Prices which had since late March been up over it, but one failed attempt lower, mid-April, finally punched their way down through it 11 weeks ago, but could not sustain the move lower with an original gapping action higher, changeover or otherwise, which topped out a number of times since the end of April to date. We seem to be close to finishing these heartbeat moments of up and down. Prices pushed higher last week, significantly higher, up through the bright green upper bear channel line, currently at 46.14, the bright green April to date shallow bear channel, currently 42.71 to 46.07, leading me to lay out some potential targets topside for this break higher. A primary target X up at 48.80 and a secondary hard to reach target X1 up at 49.51. Both are around resistances. The former is around the high for this year at 48.88, whilst the latter is just under a pair of 50% Fibonacci lines, especially the 50% Fibonacci line of the July 19th and March 22 move at 49.64. However, that move higher ended up as a shooting star pattern, type 1, bearish, which casts some immediate doubts on the break upwards. However, I will still maintain those levels for this week, as we seem to be stabilizing over the bright green upper bear channel line. That was a lot to digest, I'm afraid, what I've just said, but there is still more. You see, this all comes down to a piece I've previously spoken about. I noted the recent rising lows and fairly static highs of a bullish incentive, and a new pattern emerged, an early May to date ascending triangle pattern, highlighted in dark blue on my daily chart, and it's currently 45.09 to 46.68. Last week I said, when I started looking at the upper trend line again, and I quote, "There are no targets for this pattern as yet. to have just breached and not broken this pattern on the upside. But I can once more lay out some potentials for what could be either a break higher or maybe lower if this breach higher turns out to be a false break out of this ascending triangle. Thus, a primary potential on the top side will be plus 241 ringgits from a confirmed breakout from the ascending triangle pattern, with a secondary harder to reach potential of plus 344 ringgits from a confirmed breakout from the ascending triangle pattern. Please note, even now we have the possibility of false breaks, so please pay special attention to this. Thus, just in case there is a false break higher, we have a primary potential on the downside of minus 151 ringgits from a confirmed breakout from the ascending triangle, with a secondary hard to reach potential of minus 344 ringgits from a confirmed breakout from the ascending triangle pattern. Now it is time to see, hopefully by next week, if we will have targets topside or not. End of quote. Well, I'm afraid to say that the shooting star pattern, type 1 bearish, that we saw last week, that there are still no targets because of that as yet, but the potentials are still valid. I am now wondering, with the market seemingly stabilizing over the green upper bear channel line, bright green upper bear channel line, whether this might lead to possible targets topside. Maybe next week? We shall see. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.